Hey, it's Michael Saul with the Stock Market Trading Watch List for Monday, November 21st, 2011. Okay, so let's take a look at the S&P 500. See, we formed a little doji on the session on Friday. And the futures are trading to their 50-day moving average, down about 11 or so points. So if we open around here or lower, then we would be at that 50-day moving average. I'm watching that for potential support. All right. I don't just use straight support and resistance levels. I like to see an intraday pattern set up, something to lean against here. But you have support right there, and then you have the next support down here at 1190.58. And in between there, you have the measured move of this A, B, C pattern that I had talked about a couple of weeks ago. All right, yeah, it's right around there. So A down, B up, and then C down. So that's what I'm looking at on the short term as potential support. Now for resistance, if we were to gap up or we were to rally up, I want to see us get back above this candle right here, Thursday's highs. That'll make me a little confident that the bulls could still try to make something work into Turkey Day. Okay, I'm not bearish here, but if we get through that 50-day moving average with a bullet and then we get a lame bounce that does not remount it, then I am going to be switching to bear mode. Now, the way I'm going to be doing this is if we break the 50-day moving average, and I'm not talking about intraday break. I'm talking about a break through it, a close through it. I'm going to go to neutral. The next bounce, if we can't get back over that 50-day, then I'm going to switch to bear mode. Okay, but right now, I am still giving this follow-through day the benefit of the doubt. Yes, we've had some distribution days that have been peppering this move, but I'm still giving it the benefit of the doubt for now. The 50-day is my line in the sand, but I will be switching to neutral if we break down. Obviously, look, if we crater through it on some big event, I'm not going to sit here with my arms folded going, I'm neutral. And I'm not saying that you can't trade it intraday if it does break the 50-day moving average. Okay? I'm just saying on a closing basis, if we slice through it, I go neutral, and then I want to watch the first bounce. Because if that bounce stalls out on a retrace, I'm going back to bear mode. Okay? So, NASDAQ 100 broke down out of the diamond. Okay. Broke down out of the diamond, and it had a little bit of continuation here. See, this kind of moved through the 50-day. If I see this on the S&P, and I already don't like it on the NASDAQ 100. So I'm going to watch this to see if this gets a bounce, what it does. Russell, okay, still has the 50-day to be tested. So holding up a okay chart-wise here. All right, not great, but okay. Okay as in if we can get a bounce. Right? Here's the Russell. Here's the semiconductors, sorry. We are just at the 50-day right here. See if that gets continuation down the banks. A little pause day after the break of the 50. So what's going to happen here? Some support down here at 36.44. Look at a couple of stocks quickly. Bank of America. Yeah, just oozing. JP Morgan. Yeah. Took a little pause. Citigroup. Bank of New York. Northern Trust. These are the ones that I like to look at. Okay. Cyclicals. 50-day moving average. Watch for it as support. XLB held the 50-day 2 days in a row. You could see tested it but held it. All right. Healthcare. Yeah, trying to hold that 20. See if we can get a bounce here. Check Aetna out. All right. Just about at the 200-day. I'd watch that. United Healthcare, though, not looking nice here. I skipped broker-dealer. I don't know why, so I apologize. Yeah, just not looking good. Goldman right at the 78.6 of this swing with a narrow range candle. So if it gets a bounce here, I'd be watching these moving averages that are headed down as potential resistance. All right, and if it breaks through, watch for a full retracement down. That's my line in the sand. Okay. GLD, holding the 50-day for now. SLV, yeah, broke out of this channel, but notice how it's trying to come back in. So if this is just a one-day pause, then watch for a quick test of these lows and beyond. But if not, maybe this is just a fake out, make out, back in. Doesn't look like it really doesn't look strong here, though. Okay, does not look strong. This was a pretty ugly day. Gap down and closed out below the channel. OIL, okay, had been moving nice out of this stealth bear flag here, the break over the 200-day. Now you got to pull back to the 200-day. So now you want to watch to see if oil can get a bounce here. Here's OIH. And the 50-day, is this going to hold, or are we going to swipe through it? Stocks of interest, Apple, 369.75, and then the 200-day. Key pivots for this one. Okay, watch those levels, especially if you're watching intraday. Amazon through the 200-day, not looking nice. Okay, pretty ugly day. Wire to wire, right? So, get a Fibonacci grid out. Boom, boom, boom. There we go. Okay. And there it is, 192.07. Probably not the exact number. Probably off by a couple of ticks here and there. But just do it yourself or just use the level. Right, I can just move it little by little and you can see how much it changes. Okay, so like around the 192 area. It looks like a little bit below 192. And like I said, I don't use exact numbers. I look, use them as reference numbers, and then I look intraday. All right, eBay, somebody wanted me to look at. They're just not looking nice, but I don't see a strong pattern there. Intel. Okay, Intel has been one of the stronger stocks. We drew this trend line in. It clipped it, but came back above it. Let's see if it can get a bounce. Mr. Softy. Where are you, Mr. Softy? Through the 200-day. Not looking so nice. All right, Hewlett-Packard. Yeah, I mean, this one's not looking terrible if we can get a bounce. I definitely don't want to be involved in this one if we're not getting a bounce in the market here after this ugly candle. But right here, it looks like it's forming a little consolidation or maybe even a little handle-like pattern. Let's see what we can do with this one. AT&T. Yeah, I'm looking at a lot of the Dow stocks here. Yeah, just slop, 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 slop. Caterpillar, 200-day double top, 20-day, will it hold? Okay, if it doesn't, it could get a retrace down to the 50. Also have a gap here. Is that a gap? No, this looks like the gap up here at the 87.50, right around the 50-day moving average. Finally, research in motion. Still think this one could try to test $15. So let's see what happens here if the market tests support. Right now we're gapping down. Doesn't mean that's going to happen. A lot of things can change overnight. But if we open up around support, see what we do. See if the bulls step in, okay, or see if we sell down, maybe shake out some of the weak hands and then remount it. I mean, it is a Monday, but it's the week of Thanksgiving. Okay, it has a bullish hue to it. All right, I don't like to use the word bias because we're talking about seasonals here. So price action always takes precedence over that. All right. Any questions? Feel free to contact me. My contact info is at the beginning of this video. Have a great trading day on Monday. Great trading week. Talk to everybody again on Tuesday.